Numbers out of Pan-African Resources this morning show a 29% increase in revenue from gold sales to £68.5 million for the year to June. Headline earnings a share rose 26% to 1.07 pence. Well, join me from the London Stock Exchange with more on the numbers and prospects as CEO Jan Nelson. Jan, good afternoon.
Good afternoon.
Well, Jan, you've obviously been helped by the strong gold price over the period, and while you don't report in rands, you must still be affected by the strong rand as your costs come in rand. What was the impact of that?
Well, effectively our production was fairly flat, which was not a bad achievement seeing that our mine was closed due to illegal mining for 2 weeks. But obviously the 29% increase in our revenue was a result of the 26% increase in the effective gold price that we did receive over the reporting period.
And of course, that weaker pound obviously had a positive impact on your revenue line too.
Sorry, just say that again?
So the weaker pound obviously had a bit of an impact on your revenue line, because we did see the pound weakening by about 17% against the rand over the course of the year. Yes,
we certainly did see that, yes.
Just looking at your cost base going forward, because the cost of production up 42% in pound terms, that's to just over £40 million, up only 18% in rand terms. But you must be facing some cost headwinds as you go into this new year. And of course we have wage costs, additional security costs, higher electricity costs. How do you play those going forward?
Well, I think that we can now report that we've resolved the security issue around Barberton Gold Mines, and with the assistance from the South African Police Force, 6 of the syndicate members were arrested last week. So we will normalise that security cost. And if you actually look at our wage bill, our mining cost, our processing cost, and just add those up, we only effectively had a 4% increase year on year. So it was really the abnormal items, which was electricity and security, that resulted in our costs being so high. But as I said, we will normalise that back, and we expect increases then to be in line with about 8 to 9% moving forward.
Do you have to maintain a higher security presence at the mines though, or do you think you have rooted out the cause of those breaches?
No, we've definitely rooted out the problem with the assistance from the South African Police Force. As I said, all the syndicate leaders have been arrested, and we can now normalise that. And we've had no occurrences of illegal miners in the last 4 months. So I think we're pretty happy with where we are, and we should see our security costs at least decrease by half of what it is now.
Well, what sort of impact on your numbers did the additional 26% stake in Barberton have? Because of course you now have 100% of that Barberton mine.
Yes, I think the effect that had was, as you could see, that the attributable profit went from £4 million to £14 million, and that enabled us to pay a dividend or propose to pay a dividend of over £5 million to our shareholders.
Of course, those old order mining rights at Barberton have now been converted to new order mining rights. Of course, that must be comforting given the uncertainty that we've had in the mining sector recently in South Africa.
Yeah, I think certainly the conversion have given us confidence. I also think with the whole criminal mining issue, Minister Shabangu came to the mine, and she's also greatly assisted us. So, I don't think we have any concerns. Obviously, there is a debate in South Africa around certain aspects, but I think we're fairly comfortable with where we are, and I think it's not unhealthy to have debate.
And of course, you are going to be maintaining production at Barberton at close on that 100,000 ounces that you have been getting. Just looking further afield, though, because Phoenix also due to be coming on stream at some point, and that should be sometime next year.
Yes, production is scheduled to start on the Phoenix Platinum project by the end of next year, and that will contribute about another 35% in terms of what Barberton is producing in terms of its profit.
Forecast cash costs for Phoenix at $400 an ounce. How does that compare with other producers?
Well, there's no underground mining involved, and we're extracting platinum from chrome seams. So it will be one of the lowest, in inverted commas, platinum cost producers in the South African industry. Probably a bit of an unfair comparison with the underground platinum producers, but certainly it will be one of the lowest costs. And with the current basket price at $1,350 per ounce, that gives us a very, very healthy margin.
How do you think your rating is going to change with the market, though, after the Phoenix comes on stream? Because, of course, you have been mostly a gold play until now. You're now going to be a little bit more diversified, so still focusing on precious metals, but not purely gold.
Yes, I think our main focus still remains on gold, and we're still looking to expand in the gold sector. But I think we do offer shareholders now a unique exposure to platinum and a precious metals feel. And I think with the low-cost structure of the platinum, I don't think that should be a concern to our shareholders. And our main focus is to make profit and increase our margins. And I don't think that will in any way detract from the gold, from our gold business.
And what sorts of expansion prospects do you have for the gold side of the business?
Sorry, could you just repeat that
so
again?
The expansion prospects for the gold side of the business?
Well, we are looking to increase our gold production within the next 5 years from a current 100,000 ounces to about 125,000 ounces.
Outlook for the gold price at this stage, of course, we've had it hovering around these levels for some time now, recently hitting all-time highs of $1,260 an ounce. What do you see as the driver to the gold price going forward? Do you think we can sustain the levels where we are?
Well, I think we're expecting from the research that we're seeing that we're expecting the gold price to be between $1,000 and $1,250 an ounce. I think we still see weakness in the American economy. But I think the things that we need to focus on from our side is the things that we can control, and that's our costs and our productivity. And I think that's the things we will focus on moving forward.
And of course, you are sitting debt-free at this position, at this juncture, unhedged, able to obviously fund your current mining with your internal cash resources. How about when Phoenix comes on stream and beyond that? Do you think you might have to gear up a bit?
Well, I think despite the fact that we are paying a significant dividend, we have enough cash reserves and we have the ability to gear ourselves to a certain extent to fund all of our organic growth ambitions. So we don't need to come to the market to fund any of our current internal growth.